So look, there are mainly going to be two types of traders that trade in any other financial market. Risky traders and risk-averse traders. And well, there's a third type too, and I would say that's the worst type of trading, but I will get to that later on in this video. So in this video, I'm going to more or less compare risky trading and risk-averse trading, and maybe we will even get to that part where we find out why exactly do traders trade that way. So make sure you watch this video all the way till the end, because you need to know the difference in these risk profiles as it directly affects your trading performance. So hi, it's Daksh this side from Forex Monopoly, and to start, I will first tell you what exactly does risky trading and risk-averse trading mean. By the way, did you know that Paul Tudor Jones is considered to be somewhat a risky trader, and Ed Seykota on the other hand is considered to be a complete risk-averse traders. Now, if you don't know who Paul and Ed are, then check out these videos I have uploaded in which I talk about their life and financial career. Now, Paul is a risky trader, which means that he exceeds his optimal risk limits and risk more in his trades. So, when we say that traders should not risk more than 3% in any of the trade, then risky traders risk more than 3%, maybe 4%, and maybe 5%, and it could be anything. Now, why do they do that? I will get to that soon, but just understand that risky traders take more risk and it's not necessarily a bad thing. And I will explain that, so just stick around. Now, on the other hand, Ed, who is a risk-averse trader, will stay within his risk parameters and will never ever over-risk in the trades that he takes. So again, if 1 to 3% is the thumb rule, that is, never risk more than 1 to 3%, then risk-averse traders will stay well within that 3%, and they may risk anything from 0.5% to 3%, but will never ever exceed that. Now, do you get the comparison? Like, Paul being a risky trader will risk more, and Ed being a risk-averse trader will risk less. So now, let's get into some details here for risky trading and risk-averse trading. Lots of people think that risky trading is bad and it's going to lead to failure. Well, that is not entirely right. If you are a trader that risk more in your trades, then you should do that only if you have a plan, or if you are very confident in your trading system. But yes, having a plan is the most important thing. Risky trading may not necessarily lead to failure, or else Paul Tudor Jones wouldn't have got to where he is right now. Now, I guess it's the right time to tell you about the third type of traders, and those are the reckless traders. Jesse Livermore will be a good example of someone who is a reckless trader. And if you don't know who Jesse is, then check out this video over here. There is a very thin line between risky trading and reckless trading. And you know what separates the two? Knowing that you are risking more than what you should and having a contingency plan in the case the trades go south. Say that you are tracking Tesla for some time and you see that it's going up all the time, and it just doesn't make sense for it to go up. I mean, even Elon Musk has said that time and time again that Tesla shares are overpriced. Now you finally see some signs of reversals and you are expecting the stock market to crash, just like Michael Burry did all the time. Anyways, this is just once in a blue moon opportunity, and so you enter, but with a higher risk. You enter the trade risking more than you normally do because of the confidence you have in the trade, and you are waiting for it to play out now. So until now, you are just a risky trader. But what if the trade is going against you? How would you react then? You risk more, but you had a plan, right? So if you don't have a plan and are still adamant that no, I am right with my analysis and the trade should and will go in my favor even though you have over-risked, then you are nothing but a reckless trader here. Now, there are a lot of things that you can look for. So manage such trades that go south, but you know what's the wisest thing to do? Cut it off. It is really that simple. A risky trader won't have any problem with cutting such trades off. But reckless traders will keep finding reasons to stay in the trade, and the next thing that happens is that the capital becomes zero. So what I want to tell you over here with all of this is that if you are a risky trader, then you should have a plan to deal with things when it goes against you. Now let's look into risk-averse trading. Many people say that risk-averse traders trade the way that they do because they are just scared to risk more or just cannot take big losses. Again, that thing is not entirely right. At Seykota is a risk-averse trader, but he isn't actually scared to risk big. All that risk-averse traders think about is that the market is going to give them lots of trading opportunities and they just don't need to risk a lot in one single trade. And yes, if you are a risk-averse trader, then you need to make sure of one thing. Don't risk so less that the returns that you get are not even worth it. Like, say that you have a $100,000 account and trade with a strategy that has a risk to reward of 1 to 2. Now, don't go on trading by risking just $100 in your trades. And the reason for this is with a risk to reward of 1 to 1, by risking $100, you will earn $200, which is good. But with a $100,000 account, a $200 gain, it won't be worth it. Maybe up the risk limit to, let us say, $500 per trade. And even that is still 0.5% of your total capital, and it is just fine. Finally, you know what? Risky trading and risk averse trading all boils down to the trader's personality. And this is actually proven in this 2008 research paper in which a group of traders with different personalities and characteristics were observed. The research concluded that performances depend on the trader's personality as the personality directly influences their risk profile, and that is whether they risk more or just risk enough. This is so evident in the comparison between Paul Tudor Jones at Seykota and even Jesse Livermore. Pick out any random traders and you will find the same thing, that their personalities are different, which leads to them risking differently and hence their performance would be different too. So, to sum it up here, there are mainly three types of traders. The first ones that are the risky traders that risk more, but they only do that with a plan. Then the second ones are risk averse traders that risk lesser or just enough, and they are all about protecting their capital. And then we have the notorious third type, the reckless traders that risk a lot and with the only aim of earning more, but in the end, they go bust. So, what type of trader are you? Risky or risk averse? Please don't tell me that you are one of those reckless ones. Comment your answer in the comment section below, and also if you enjoyed this video, then make sure you hit the like button and also do not forget to subscribe to this channel. Thank you so much for watching.